Hello, is Scott with Zenvi AI. Today I'm excited to be speaking with David Rottenberg. He's a founder and managing principal of Morvay. They are a real estate company that's launching with ambitious vision, building a branded portfolio of Class A shallow bay warehouses, scaling multifamily developments near transit, and deploying capital via creative lending strategies. So we're going to talk about how David sees the commercial and multifamily markets evolving, how he sources and structures deals, balancing tech and relationship, and just where Morvay is going to go in the next 5 years. So, David, welcome to the show.
Thank you. Thanks for having me, Scott.
Yeah, let's kind of start the beginning. How you transition, like your journey in real estate, and how that inspired you to launch Morvay.
Yes. Um, I guess it was about 5 or 6 years ago at this point, I launched my first business with two partners. That business is called the Sasson Organization. The key focus there was acquiring office assets in cities that we thought that those, cities and states possess positive demographic trends that would outpace that of the national average. We bought about 1.5 million square feet of office at, with the goal of buying it at land value just as COVID hit. Reposition the portfolio, build off a couple of those assets, still hold about 50% of them, and then ended up exiting that business in January to launch what's now Morvay.
Cool. Can you share with us? Obviously, there's a lot of different routes to go in real
Mm.
estate, but the focus on shallow bay warehouses and multifamily transit oriented developments. How did you decide that was the
Yeah, so first and foremost, and just so everyone's aware, we're developers, owners, operators, and investors. And so what we try and do is control the whole food chain. And, when we launched Morvay, the goal was really to create a vertically integrated platform, which is what we did. And so something that, we're determined to focus on always is scaling thematic strategies. And so when we took a look at kind of the world and where it sits, we found that there was a massive glut of supply within the industrial space for, large and big box. And there was a massive need on the smaller end, um, for a lot of tenants who were seeking space, but just couldn't find really solid space to operate their businesses out of. And so we saw rents rising dramatically. We saw an opportunity. And so now we're developing, I'll call shallow bay warehouse, specifically in the tri-state area, and we'll ultimately scale down the Eastern Seaboard and across the country. On the transit-oriented side, more often than not, a lot of developments that have occurred in the past have been from merchant builders who typically build assets, hold them 3 years, and then exit. We found that there are a lot of property owners who may not necessarily want to sell their land in these transit-oriented properties, but partner on it. And so our focus there is partnering with landowners who want to hold for the long term, and then developing, I'll call it like best-in-class multifamily assets that are meant to be sort of generational type holds. And so that's sort of the key tenets of both strategies. There's a lending side of it too, which we don't have to get into. I'll stop there.
okay? So, if someone's not familiar what a roll up strategy is, can you explain that?
Yeah, I think the easiest and simplest way to explain it is you acquire bits and pieces of real estate or of businesses or whatever it might be. And the idea is that as you acquire these bits and pieces that are like kind, the vehicle of which you're acquiring becomes more and more valuable and scales tremendously. And there's obviously huge benefits to the owner at scale where you can provide better services, margins are better, your rinse and repeat on, processes, things like that. And so the idea there is you roll up a bunch of these small assets into a big asset and then ultimately exit to someone who wants to, continue to garner that value or recapitalize with a new partner who wants to continue to scale and garner value.
Okay. So obviously Morvay is pretty new. What's been the biggest challenge with scaling it so quickly in the beginning right now?
You know, that's a really good question. The first challenge is staying really focused and staying disciplined. Something I always have had a problem with is there are a lot of deals and things out there and noise, but staying within our buy box and on our mission is very important. And so it's easy to get drawn into different things. So staying disciplined is one. The second is there's a massive disparity between what sellers of land or assets think that their properties are worth and what we believe that they're actually worth today. And that's a similar story to we've seen in the past where it's, there's been a reset of asset values due to interest rate rises and things of that nature. And so it's finding those sellers who are realistic sellers to buy from, and then quickly determining those sellers who, for lack of a better term, are out to lunch, on their pricing. And so those are the two challenges. We do have, we're well capitalized. We've got a lot of groups that want to invest, and it's all about just finding the right deals and investing smartly and executing.
Yeah. How are you finding those? Is it just your relationships that's leading to that, or are you guys going out on your own to find new opportunity?
We buy off market assets. It's very hard for us to buy on market. And that's just because by nature, if you buy on market, you're typically the highest price payer, unless you have like some sort of carrot, like you have a tenant in tow or something like that. So we're typically driving deals through relationships we have with brokers, relationships we have on the ground, just like scrappy deal guys, and then straight to property owners. Is typically how we're finding our transactions. And then secondly, it's, um, you know, if there is a shallow bay warehouse deal or any piece of industrial land, it's likely sent to us via brokers. And so we track those deals. And if they languish, we'll go in for, a second bite. Once the sellers are more realistic, or if the market for whatever reason finds it challenging, we see opportunity and challenge.
To chat about technology, I know you kind of had mixed feelings about it, but how are you guys using technology, but also maybe the human connection, and how do you kind of balance those two?
Yeah, it's a good question. So, real estate historically has always been a laggard with adopting technology. I think the way we look at it is we try and harness as much tech as we can as a crutch to help us find deals, to help us better understand data, to help us, in some cases model, or in some cases find new lenders or new equity or whatever it might be. But then all of that tech always enables us to do one thing, which is build relationships and execute with those relationships. And so we see it as a crutch to help us better ourselves, not as the full solution of, this is going to do our job.
Okay. If there's one part of your business you wish you could automate, wave a magic wand, what would it be?
Hmm. I think if we could choose one thing to automate, it would be getting clear and concise data that's actually correct around sales, rental comps, debt that's been sourced by other groups in the immediate market, because real estate is still a very opaque market. And so one thing that's good about scale is within your portfolio, we can understand, a lot better than other people because we're on the ground. But I think if you create more access to data, it would democratize the business more. It would make it more efficient, but it will be also easier for us to make decisions in, on a real time basis where other things may be very cloudy that we're trying to understand.
Okay. So I know you'd mentioned your guys in the tri-state area, and I think you guys are looking at the Sun Belt. Is that correct?
So our focus is in developing specifically in the tri-state area and getting that process very right. And then we have a lending arm that seeks to lend to developers looking to build shallow bay or mid bay industrial throughout the Sun Belt. And so that's on our credit side.
Are you guys like, hey, this is the lane we're in? I'm just wondering how you guys evaluate risk, like whether if you're going to a new market or different asset classes, how do you guys decide where you want to pursue?
So everything we do is governed around supply demand imbalances. And that is in effect, like in everything. So that could mean that there's a supply demand imbalance on the tenant side. And that's why we want to go build in New Jersey. And that can also mean that we see that there's a supply demand imbalance on 10 to $20 million loans where there's not enough lenders out there who would actually look at providing construction financing from 10 to $20 million in the Sun Belt. And so it's creating inefficiencies and spreads and things like that. And so everything's governed around that supply demand. And if that exists, there's typically some sort of, alpha to drive or profit to make there.
So obviously your company's fairly new. I'm just wondering, what's the vision look like? What's the next 3 to 5 years look like for Morvay?
Yeah, it's a great question. Look, the business is ever evolving. And so any successful business has to stay nimble. And I'll probably be wrong with what I say here because back in 5 years, things change, market changes. We can never, we don't have a crystal ball. But I think the focus is going to be on process. And so it's going to be continuing to build out this vertical integration and build a competitive advantage on the development side, the management side, and the deal sourcing side to be a full service operator, if you will. And that would help us better understand for our investors better, we'll be better at underwriting, quicker at underwriting, better executing, things of that nature. And so I think that the idea is to rapidly grow this business via that route, via organic acquisitions, and continue to build this.
The focus of the podcast really is to talk about how businesses have scaled. What would be a advice that you would give to somebody that's maybe in your shoes a couple years ago and they're looking to go down the road that you're going down? What advice would you give to those people?
Yeah, and look, I still take this advice I'm about to say. Everything is impossible until it's possible. And so the concept that something might be too big to go after, or you don't know, or we're not totally sure. If you put the preparation in and you have the right energy and the right mindset and you do the proper work and you do it with good intention, anything is really possible. Don't shy away from the $100 million deal or the $200 million deal just because you don't think you can. I think people would be really amazed with really how much we can accomplish in 24 hours.
Right. Got it. Okay. If someone's interested in learning about you guys, what's the best way to learn whether they want to, as a partner, investor, collaborator? What's that look like?
I'm pretty open. Please email me. My email is dmr@morvayholdings.com. We're working on our website right now. We're revamping, so it'll be on there as well. I'm always around to talk, and I like hearing from smart people.
Last question I was going to ask you just about, obviously you said you're well capitalized. How do you guys go about finding investors? Do they find you, or are you doing any type of outreach?
No, it's been organic outreach, honestly. Um, Look, I've personally done a lot of, cold outreach, meeting investors and things like that. And so we have a nice Rolodex. Obviously, it's always great. And we always want to meet more investors. I mean, we're in the business of investing large amounts of capital in real estate, but we've traditionally found them via just natural relationships that build over time. Because at the end of the day, it's a partnership. It's all about trust.
Well, thank you, David. I really appreciate your time and excited to see where Morvay goes.
Thanks, Scott. Appreciate it. Take care.